Since the IPO candle is so important, it can stand in place of a downswing with such little price action in the first 2 weeks of trading. An upswing low on the second day sees the 5 interval line up with a very minor downswing for a valid Fibonacci time zone. The downswing on the 21 interval is another amazing result at these early stages. Naturally, the smallest possible interval will have some intervals not capture any major events at all, such as at interval 2, 3, and 13. Since support held at 149 by interval 34, attention is now directed at clearing 165 by interval 55. When 165 is cleared in early June, attention is directed at a minor retracement and consolidation upswing at the 170 boundary, still around the 55 interval. Then it is a similar situation, clearing and consolidating over 180 around the 89 interval. After passing the 89 interval, it is necessary to expand the Fibonacci time zone, using some of the first swing points and trying to run interval lines through major events provides a more valid and reliable Fibonacci time zone. As usual, similar results can be achieved with different points defining the initial interval length. Since the chart fell into a wide prolonged range at new record lows, it was possible to use the length of the first uptrend for a larger interval, which did accurately cover important continuations with interval 2, 5, and, to a lesser extent, interval 8. Moving one bar to the left onto the IPO candle makes little difference, especially with the first 3 intervals. Like normal, it is better to start a new Fibonacci time zone when a major reversal takes place. Starting with the first few swing points in the new downtrend produces excellent results in identifying the approximate times of various stages in the downtrend. When the new uptrend begins, it is once again normal to see less reliability and reduced identification of significant events, even with interval 8. This Fibonacci time zone was mainly confined to the context of the first major downtrend after the IPO.